If you owe back taxes to the IRS or state, you've probably done at least some research to figure out how to solve your problem. It doesn't take long on Google before you see companies offering to help you settle your tax debt. Most of their ads are promoting the offer and compromise, and a few might mention something called a partial pay installment agreement. But which one is right for you? What's the difference between an offer and compromise and a partial pay installment agreement? That's the topic of today's video on the other side of the break.
1-877 Levy King, Levy Levy King, 1-877 Levy King, LevyKing.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877 Levy King, LevyKing.com.
1-877 Levy King, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877 Levy King, LevyKing.com. I'm also the author of End the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan that you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. My book has been a top seller on Amazon for years. You could buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to my website, www.endthetaxnightmare.com, enter your name and email, and I'll send you a copy right away. No charge, not even for shipping. Totally free. Before we go any further with the video, please take a moment to subscribe to my channel, and don't forget to smash that like buttons for the YouTube algorithm and hit that notification bell so you'll get a heads up each and every time we drop a new video. Okay, guys, let's dive into today's content. All right, you've heard the intro and you saw the thumbnail. You already know that today we're talking about the offer and compromise and how it compares to the partial pay installment agreement. You should know that both are viable options to help get you out of IRS collections while paying less than the full amount that you owe. According to irs.gov, an offer and compromise is a legally binding written agreement between a taxpayer and the Internal Revenue Service that settles a taxpayer's liabilities for less than the full amount owed. A partial pay installment agreement is a type of installment agreement or payment plan where the taxpayer pays some but not all of their tax liability over a period of time. The net effect of these two programs are similar. Both of them allow you to resolve your tax problem. They get you out of collections while paying less than the full amount than you actually owe. In fact, I call the partial pay installment agreement the backdoor offer and compromise. Let's look at the pros and cons of both programs so you can determine when you should consider the OIC and when you should consider the PPIA. The first up is net equity in assets. There are two components of an offer and compromise calculation. They are monthly discretionary income and net equity in assets. In my experience, the thing that causes most OIC cases to go off the rails is the equity. Think of equity as the market value of an asset minus any debt that you might owe against that asset. Generally, the IRS expects you to include the amount of that equity in the amount that you offer. I've seen many cases where the client would have qualified for an offer, but once you factor in the equity, they no longer qualify. I've also seen cases where the client might still qualify for an offer, but the amount that they must offer is more than the taxpayer is willing or able to pay. Asset equity is normally treated differently under a partial pay installment agreement. The majority of the time, we can qualify a client for a PPIA even if they have net equity in assets. The ability to get a partial pay even with net equity in assets is one of the main strengths of the PPIA. So if you have assets with equity, an OIC is going to be difficult to secure, whereas a partial pay, that's your friend. The next up is future income. Now, We're going to consider future income and future assets, right? One of the main benefits of doing an OIC is that it creates a permanent, legally binding agreement between you and the IRS. If your financial situation changes tomorrow, an OIC would not be affected, whereas a PPIA is not permanent. And if your finances change for the better, it's likely that the IRS would want to change the terms of the PPIA. For example, let's assume you owe $100,000 and you have no net income and no net equity in assets. Let's also assume that the IRS accepts an offer of $1,000 to settle your debt. If you win $10 million in the lottery 6 months from now, the IRS cannot come back and say they want you to pay the entire $100,000 liability. The OIC remains legally binding on both parties as long as you don't default any of the OIC conditions, such as paying the amount you settled for, filing your tax returns, and paying on time. As long as you don't default, then the OIC is binding. On the other hand, a PPIA is reviewed every few years. Once the IRS learns that you won the lottery, they'll want you to pay the debt in full. So if you expect your financial situation to improve in the future, the OIC is likely going to be the better option for you. The next thing to consider is your monthly living expenses. Your monthly expenses include things like your mortgage, your car note, food, clothing, childcare, etc., 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 right? I did a whole video on how your monthly expenses are probably what causes most OIC applications to fail. Click here to watch the video. Long story short, the IRS only allows certain amounts for certain expenses. If your expenses exceed these amounts, you'll run into problems with your OIC. The government is more flexible with these standards when it comes to a partial pay. They're more likely to allow certain out-of-standard expenses, at least temporarily, when we're asking for a partial pay versus an offer. I've posted a link to the IRS collection financial standards in the description below. The next issue is time frame, right? So that's the last factor I'm going to bring up today, is the time that it takes to complete an offer and compromise versus the time it takes to complete a partial pay installment agreement. From start to finish, an OIC can take 12 months or more. And honestly, right now, you're probably looking at more like 12 to 18 months due to staffing issues at the IRS because of COVID. Check out this video for a full breakdown on the OIC timeline. A PPIA can be concluded in 60 days or less. Because there is less work to be done, the professional fees that you will incur with the partial pay are usually going to be significantly less than those for an OIC. So if you're in a hurry or you have a limited budget to pay professional fees, a PPIA may be your answer. In summary, the offer in compromise and the partial pay installment agreement are different tools in your toolbox. Both of them are viable options to settle your tax debt. If you can qualify, the OIC often produces the biggest savings. An offer is also permanent, whereas a partial pay is not. If your income or asset situation is likely to improve in the future, OIC is your best choice. A partial pay also produces good outcomes, though. This is your choice when you have net equity in assets, or if your expenses are out of standard, or if you need a quick and inexpensive fix to your tax problem and you don't have time or the money to do an offer, consider a partial pay. Speaking of tax problems, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, lucky for you, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com or click the link below, follow the prompts, answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com. Or you can give us a call at 1-877-LEVY-KING. That's it for this week, guys. Talk to you later. Bye.
1-877